Let's switch over to how Brexit is shaking things up in the stock market. Korean shares bounced right back on Monday. Still, in light of the potential for market volatility, the nation's top policymakers vowed to closely monitor the situation and take action if necessary. Kim Min-ji has the numbers and more.
Korean shares closed almost flat on Monday on hopes the major economies would pump liquidity into the markets to cushion the fallout from Britain's decision to depart the European Union. The benchmark KOSPI closed 0.08% higher after falling to a low of just over 1,900 at one point in trading. The tech-heavy Kosdaq also recovered its earlier losses after opening down 2.8%. The local currency, meanwhile, continued to weaken against the greenback, falling 2.41 from Friday's close. In light of the uncertainty stemming from Brexit, Bank of Korea Governor Lee Ju-yeol said the central bank will maintain a high level of market liquidity to ensure stability. Speaking at an emergency meeting with senior officials, Lee vowed to take all the necessary steps to minimize the negative impact on the local financial market and the economy. The top central banker also noted, however, that price fluctuations in the local market and other Asian countries have eased, and stressed there is no need to react too sensitively to short-term changes. The head of the nation's top financial regulator had a similar response, vowing to do everything possible to counter the fallout at a separate meeting with local financial authorities earlier in the day. Financial Services Commission's chairman Im Jong-young warned the volatility will continue for some time until the markets rebalance, as a number of variables are still at play. Im said, however, the situation is highly unlikely to develop into a full-blown global financial crisis like the one back in 2008. He added that the government will keep a close eye on capital flows and is ready to take action if market volatility exceeds certain levels. Kim Min-ji, Arirang News.